Let's have a look at property. Now, property for rent across the capital cities has fallen by close to a quarter, while in the regions it's plunged to almost half pre-pandemic levels. Eleanor Creagh, Senior Economist at REA Group, joins me now. And rental demand so high, stock so low. Does this mean higher rents?
Good morning. Thank you for having me. Yeah, I mean, we're certainly seeing the housing market is slowing, but it's a very different story in the rental market at the moment. So we're seeing that supply is tight, as you mentioned, big falls in the availability of stock on market for would-be tenants to look at and try and find a vacant rental is very hard at the moment. And we are seeing that as the pandemic fades, as cities return to life, the borders have reopened, rental demand is up significantly since last year, particularly in the capital cities, whilst rental demand in the regions is actually fading somewhat. And this is translating into rental price pressures that are being felt pretty much Australia-wide, but the capital cities are really heating up at the moment. And actually, in the past 12 months, nationally, median advertised rents on realestate.com.au have risen 7%. And given that we are seeing that demand from potential renters on realestate.com.au is increasing, and particularly so in the capital cities, it's likely against this backdrop of reduced supply that those rental price pressures are going to be continuing.
Which part of the city markets are the most competitive?
Certainly. So we're seeing that it's really inner city Melbourne, Sydney and Brisbane where rental demand has picked up the most since this time last year. For Sydney and Melbourne, that's a bit of a turnaround, given that the rental markets in Sydney and Melbourne really suffered through the impacts of COVID, the closed borders, and of course, lockdowns and restrictions, reducing maybe the attractiveness of inner city life for some, but demand is back in a big way. In inner city Melbourne, demand from potential renters has nearly doubled since this time last year. It's a similar story in Sydney, particularly in Parramatta. We've actually seen that demand from potential renters has more than doubled. And in Brisbane inner city as well, it is also a similar story. And it's particularly in the apartment market that we're seeing demand from potential renters on realestate.com.au picking up in a big way.
Yeah, and that's interesting, isn't it? Because the apartment market was very slow for a long time.
Yeah, I mean, you're exactly right. The apartment market, both the market to buy and rent was relatively subdued throughout the pandemic. Again, this is seeing a big turnaround at the moment. And we are seeing that demand, particularly in the apartment market from renters, has surged since this time last year. And it's quite interesting, particularly, I guess, against the backdrop of the fact that the house price to unit price premium hit record highs earlier this year. It does mean that maybe for investors, that's potentially interesting, given that we are seeing demand from renters really picking up, rental price pressures coming through, and no housing prices are slowing and falling in some places. That potentially translates through to upwards pressure on rental yields. And of course, in the apartment market, given that unit price or the unit price growth has been relatively subdued over the past 2 years, there's potentially some options there that investors could look to capitalise on over the year ahead.
There seems to be a little calming in the area of interest rates because, of course, they're going up. But people have sort of sat back in their seat and realised that they're still very, very low. We saw some record prices again last Saturday in Sydney and Melbourne, and lots of auctions again today.
Yeah, I mean, look, I would say the general trend when we look at auctions is volumes are certainly reducing, particularly so in Sydney and Melbourne. We're also seeing that auction volumes have come off a little bit in Brisbane, but it's not too surprising given that the housing market has slowed off what were really exceptional levels that we saw last year. That would have really been surprising if we had continued that, so to say. And of course, we are entering a seasonally quieter winter period, and interest rates are on the rise, so that does reduce borrowing capacity and mortgage affordability. So it's a slowdown, I would say, at the moment off what was really exceptional levels. We can't forget that last year the annual pace of housing price growth was the third fastest pace in more than 140 years. And I guess that exceptional boom just simply couldn't continue.
And lots of people have made a lot of money in that 2-year period, and it's still there, isn't it?
Yeah, I mean, that as well is a hugely important factor, I think, when we look out over the next few months, is that even if we do see housing price growth remaining subdued and housing prices falling, which we do expect that will continue over the year ahead, but it is against a backdrop of housing prices that are up 35% on pre-pandemic levels. So most people are sitting on substantial equity gains, which will, of course, act as a buffer throughout this period when we are seeing interest rates adjusting higher.
Yeah, they're interesting times. Eleanor, always great to chat.
Thank you for having me.